So, what does your checklist look like, Vikas, when you are assessing a particular company? Say you found the sector looking attractive, then what does your checklist look like? What has to meet your criteria?
So first of all, I think for us, very very important the management quality. What is the broadly we look at three things in management: competence, integrity, and drive. You have competence, no integrity, we will not make money. You have competence, integrity, no drive, business will not grow. You need hunger. You have hunger, you have integrity but no competence, competition will eat your life. So you need to see combination of these three things for you to see that this company, this management team can deliver, right? Of course you need to also understand business model, because without a robust business model, even a good management will not be able to kind of deliver well. Like for example, just to give an example, like we historically never invested into microfinance business because structurally it's a weak business. Now even if I put a good quality management in a structurally weak business, it ain't likely to deliver you very well. So you got to see the business model. What is the inherent strength of the business model? What is the competitive advantage? What is the moat in this business? All those things you have to see, right? How much is the sort of gross margin, cushioning of the ROE profile, cash flow profile? All those things you have to see whether it makes sense. Is it a good business? And finally, it boils down to seeing the valuation, right? But more importantly, valuation is a very is an art than really a science. But other thing which we generally see, that what do we know, what advantage we have over the market, because today's time and age everybody knows the same thing, right?
Yeah.
Management does con calls, there's a full disclosure, right? So for you to have come out as a winner than others,
Yeah.
you have to have some extra perspective, extra advantage, right? And that is what we try to build. We do an in-depth research that deep dive in terms of uh, for example, since we spoke about Laurus, which has been on a large position, everybody was kind of writing them off. Stock fell from 700 to 300 rupees, and when we were doing our work, we were very convinced about their competence, the capability part they know, right? The management integrity, we kind of very 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 confident about, right? So and of course very very hungry and driven management. They want to build a very large company, ability to take difficult calls, even if there's a lot of pressure on them, right? Those are the kind of qualities stood out. And when we did our work, we felt that yes, they have disappointed for 2 quarters, but that does not mean that that will go on forever. But everybody was judging them based on 2 quarters. Like in the case of market, today if you judge India by current situation, you will obviously come out negative. But if you see what is the overall India potential, like you asked me, you generally remain structurally bullish on India, because I believe that it's a structural story. So if you believe that is part of the company management and all those things, then your that extra advantage is your perspective that look, on the other side it will come out well and deliver returns. And then when everybody gets comfortable, then you don't get that price, right? And today the stock is 1200 rupees in less than 2-3 years time, and everybody wants to buy that because now there's a lot of comfort. So you got to have some extra edge, extra advantage over rest of the market, is where we believe there's a serious alpha to be created.
Speaking of this extra edge, would you say that it was the case with one of the large cap banking stocks as well, one of the most hated banking stocks, that you had the conviction, or at the company had the conviction to invest into at the time? What was the thinking behind that? Was it a tough call to make?
Actually, it was not a tough call to make, but it's just that our work which gave us a lot of conviction, right? When everybody was not comfortable, we could see a change happening in the bank. We could see that a lot of change from a dejected, demotivated bank and team. Suddenly there's a energy, suddenly there's a drive to achieve and grow and put past behind, and when that happens, ultimately growth answers all the problems.
See, but there's a very fine line, Vikas, because there are a lot of those, say, penny stocks or small cap companies that had their glory days and then the fall has been relentless. And then to bet on that, you might just burn your fingers. But when you are saying that you see that change or that drive to alter, what is the difference? That how are you differentiating, a good company from one that could continue to face bad times?
So look, again, I'm not talking about contra investing. Contra investing believes in it's cheap, hence someday it will turn around and it will do well. I'm not. So when you don't buy anything because it is hated and because it is there are lots of stock which are hated, probably will remain hated forever kind of thing, right? What we look for is a catalyst. What is changing? What is changing from yesterday either positively or negatively. If it is changing positively, then there is the opportunity to make money. If they are changing negatively, if you have that stock, sell it or short it if you are able to, or if that's your strategy, right? So always I believe that, as one of the, I say this, often, that one of my biggest learning has been as a an investor is that focus on rate of change.
Yeah.
What is changing positively or negatively, and if you are able to figure out that change ahead of others, you have winner sitting on you, or you have a source of alpha.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.